Hello, everybody. Welcome to another episode of the System 2 podcast. Today, I have the pleasure of speaking with my friend Moses, who is the founder and CEO of RandomWalk, an idea company. RandomWalk has a phenomenal newsletter. I definitely suggest you check it out. Moses is very influential on a bunch of different topics. One of my favorites is how he's trying to convince everybody to have more children. So, Moses, why should I make more babies?
Yeah, thanks, Matei. And also, what you left out is that RandomWalk started while I was at System 2. Look, break it into two parts, whether people should have babies versus the importance of babies, I guess, two separate things. I think can you hear me okay? Because I keep feel like, okay. I mean, everybody should have babies. They're great. Like it's a very validating thing. It's humbling. And, I think it creates certain life disciplines and rewards that you wouldn't otherwise get. It gives you perspective, skin in the game. Living for posterity is important. I think it's important for civilization to, care about not just this generation, but also the next, all of those things. But I don't think that's really what you were asking me. Well, I could talk about that. Mostly, I think one of the big themes that I have written about variously over the last couple of years, but more so, actually, I wouldn't even say more so recently. It's just that, it is the end of a century-long macroeconomic, really tailwind to the developing world with the U.S. And that's been working age population growth, which is just something that has been operating in the background for so long that I think we've taken it for granted. And it does come up. I wouldn't say people are completely unaware that trend is rolling over, that the working age population is no longer growing and is by most estimates is expected to begin to contract actually over the next couple of years, and increase in the dependency ratio, which is to say, the share of people who are not working on pensions and various, as a share of the overall population is going to increase, putting more load on the existing workforce such that we have it. But it's really, I think it's one of the most, you can boil GDP or growth down into a very simple calculation of just like the number of people we have, and times their productivity. And if you have adding fewer people, then, it puts all that much more weight on increasing productivity to keep GDP growth pushing ahead. And we have had the benefit in this country and really most of the developing world of adding productive people fairly consistently. It fits and starts. We've had some big growth years and some less, but some less growthy years. But for the most part, it has been growing for over a century, and it's a huge economic tailwind, and it's coming to an end. I don't think fully people have internalized it. Growth will, by its very nature, look very different going forward than what we've used to. There's research. I mean, it's sort of intuitive, but there's been more research recently from Fed researchers, just showing, again, breaking down GDP into some two components of just adding people and adding productivity. Usually the weight is about split. That half of growth comes from adding people and half of it comes from adding productivity. And well, as I said, like now it's going to be all productivity or bust. And, I think it's manifested itself in a lot of different ways. Healthcare is an increasingly large share of the economy and really is an increasingly large share of the workforce, particularly elder care, is something I call the rotation to the national nursing home, has been a big theme. We saw it in the sort of the second wave of pandemic inflation. You had this massive pull forward of retirement, especially blue collar workers in the service industries. And, that gap was what we called a strong labor market was really a tight labor market. We didn't actually add net new workers. But we did, we had a huge drawdown on supply, and that caused wages to spike, which caused inflation to spike. And, and that gap was really closed by, migration flows. As, I had a line intended to be deliberately provocative. The great replacement is real. It's deflationary and it's pro-growth, which I think is true, for better or for worse. There are other consumer shifts too. So, I think there's something, I call service shrinkflation. The bang for the buck on services is just worse now, whether it's especially high touch services, but airlines, hospitality, instead of getting your turn down service every day, it's, 3 times a week, or the breakfast, continental breakfast is boxes of cereal, so these are rather than, your fruit and eggs served by a person or things like that, little subtle things that don't necessarily show up in the CPI, but you kind of see them once you begin to notice. And, even, nominal service consumption, has grown a lot, but real service consumption has grown much less relatively speaking. And, it does it kind of it touches everything, and you can look at countries that maybe are a little farther ahead on the demographic aging curve, like Europe or China or Japan or things like that. And you can see a lot of the parallels to where we might be going in terms of what happens there. People talk about China, why don't they consume more? And like part of the reason why they don't consume more is just because the number of net new consumers is not growing, and there's nothing, you can't get them to consume more, which is of course why China has decided to be the manufacturer of all things to to everybody. It's because their own domestic markets aren't growing quickly enough, then they will tap global markets to the extent that they can. Yeah, I mean, I could go on. I just think it's just a very big, probably the most, one of the most important secular economic drivers that we've had for a century, and and we're losing it, and it's going to matter.
Why do you think the supply of labor shrinking is a problem if soon enough we're going to have armies of robot slaves?
Well, I mean, it might not if we have an army of robot slaves. And again, you look at China is approaching its demographic winter differently, is that they are much further ahead in robotics and installation of robotics, and that seems to be their approach, is they will automate as much as they possibly can. I think we might eventually get there, but first of all, that's a pretty big structural change for the economy too, right? And that puts more of the impetus on the world of atoms more so than bits and bytes, which is a pretty big shift. And again, we're seeing that play out with AI capex in other ways as well. But that we don't necessarily have the manufacturing capacity at this point to be able to do that. Maybe we'll get there, but it's going to take a lot of money and a lot of work, and it's going to be a long process. It is one way to do it. I mean, we see that too. Is like there is. Again, on the immigration front, it's cause and effect is a little attenuated, but there's at least some evidence that suggests that sure, like when in the presence of relatively cheap substitution of labor, that's what firms will do, is they will just hire more. But when that relatively cheap labor goes away, they begin to invest more in automation and robotics, and it can certainly be a forcing function along those lines. But it'll take time, and there will be big changes along the way. And there's also again, I'm not an expert in robotics. I don't know how far along we are on getting a robot to wipe your butt and administer medicine and do all the things that we necessarily will need them to do. Yeah.
I think that what I've been looking at robotics is in warfare, and what the wars like in Ukraine and other places have shown is that you can do quite a lot with drones and those creepy robot dogs. And so yeah, well, they can wipe your butt is in some ways a harder problem than shooting you or dropping a grenade on you. And so it's which is in some ways a lot scarier, where you have this population of like robots that can do terrible things. Isaac Asimov's like 3 laws out the window, because we're starting with the exact opposite use case. And yeah, I mean, I'm just curious, what are your thoughts on the military side of robotics?
It's funny, before we touch on that, is like, I don't know if you remember this, but a few weeks back, there was a fun little Twitter back and forth between Palmer Luckey and Cliff Asness, because Tata, the Japanese toilet company, has ripped lately because they also happen to be, I forget exactly, but some part of their manufacturing, has applications for semiconductor, fabrication and things like that. So, the joke is, well, it was funny in that case because Cliff Asness didn't know who Palmer Luckey was. Palmer Luckey is the CEO of Anduril, and Cliff Asness, made this point like, oh, look, it's a bubble. Like Japanese toilet companies are ripping, and Palmer Luckey wrote back, on Twitter, no, it's not a bubble. It's it's because they have an important, some technology there. And Cliff, said, why don't you write me back under your real name, you fucking coward? And it's sorry. And it's like, well, Palmer Luckey is actually his real name. But all of which is to say, everybody should get Japanese, duvet toilets, and then where the butt wiping problem is solved. Yeah, look, I'm not a defense. Like, I don't know. I mean, yes, it's the drone stuff is clear, is scary. It's changed warfare very quickly. The economics of it obviously are a big deal. Drones are cheap and plentiful, and the cost that the things that we use to kill drones tend not to be. So there is they have definitely flipped some of the battlefield asymmetries. We've seen those kinds of flips before. Yeah, no, it's scary, and big. And again, when you think of the sort of geopolitics of it, overwhelming majority of the supply chain for drones runs through China, rare earths and magnets, and even the little parts and the actuators and the motors and things like that. And we know that there are returns to manufacturing density and expertise. Is that the more you have of it, the more experiments you get to run, and the better you get at it, and the more skills you have, and those skills are transferable. So yeah, it's a big deal. Like, I mean, I think the DoD or the Department of War, whatever it's called now, has made it an initiative, and they're investing a lot in it, and reshoring or attempting to build out domestic capacity to do this kind of stuff so that we're not reliant on Chinese parts to make our drones. I think a lot of this stuff, my guess, I hope, is that a lot of the, actual technological gains are not yet obvious to people like you and me. Like, they're probably national security things and things like that. Obviously, I don't think people are sleeping on the issue. Maybe they slept on it before, but certainly not now. Yeah, I don't know. I don't want a little, murder drone showing up in the middle. Yeah, it's terrifying. Yeah.
How, if you put on your investor hats, we're talking about a bunch of changes that are happening in the world and the economy. As an investor, how can I make a lot of money off of what's happening in the world today?
Well, with the caveat, I don't give investor advice. I mean, it's like a lot of the ways, I mean, a lot of the shifts have been very much underway. Again, the rotation from atoms and bits over to, the rotation from bits and bytes over to atoms, like we are. And, in some ways it's a return of the old economy where, hard assets, whether it's, GPUs or the infrastructure around them, utilities and things like that, have been you just follow the capex. It's trillions of dollars going into this build out. So that's certainly one way that investors have reacted. I think it was a little early. It's in this day and age, it's very hard to be different early and right for very long, because if you're right, the cycles move so quickly that, everybody catches up to you pretty quickly. But it is fairly striking. I was at the Sohn conference this year and, wrote some reflections, but one of the things that really jumped out at me was that back in the 2025 Sohn conference, nobody talked about memory. Nobody even really talked about semis all that much. And, some of that was because the big, step change in cloud code and codecs and things like that happened a little bit after Sohn. And that really caused an accelerated run, both on semis, but also memories in particular. But, all of which is to say is, people are looking for that next bottleneck. In the build out, memory's pretty expensive. Obviously, semis are pretty expensive. I think, some of the question is around whether or not those will maintain their historical cyclical characteristics, or whether or not this is just a steady state new normal where there's been a step change in the demand for this stuff. And, instead of price to book, they should be price to earnings. And, I think that's kind of an interesting question. I don't really have a good answer on it just yet. A lot of it, again, necessity is the mother of invention, and the cure to high prices is high prices. So, that people are, NVIDIA chips gotten extremely expensive. And so both, Google and Amazon became highly motivated, and the other, AMD and Intel all became highly motivated to try and build cheaper competitors, whether it's the TPUs or the Trainiums. And so in memory too, right, is that, okay, if memory, suddenly there's a huge surge on demand for memory, everybody's now working very hard, the best and the brightest working very hard to make memory usage more efficient, which is not a problem anybody really thought about before. So, the landscape does really, really evolve. I mean, for me, like, I'm a sort of secularly biased against things like consumer discretionary, high-end luxury. I think, I'm long the hyperscalers, the big companies with the huge data and really spending moats and huge profitable businesses to underwrite all this stuff, I think are at a major structural advantage, and that's been proven out. Again, who's winning and losing the race, the foundation model race seems to change every few months. Everybody's very much convinced it's Claude now, but a little while ago it was Google, and Google before then Google was dead in the water, and then OpenAI is always there and lurking, and they have, they invested a lot more in compute. So they have that advantage, and people reviews of codecs are very strong. So, I mean, that stuff is changing all the time. I know there are certain themes that continue to play out. Like, I think, e-com continues to grow, and that's been a shift in consumer behavior that hasn't really gone back. It's mean reverted a little bit, but it continues to grow, and, providing, buying cheap things with credit, particularly to the lower income households, has been a recurring and growing theme. I'm trying to think. I mean, if I had, there's always interesting infrastructure plays where you try to find, where, some place where the market hasn't completely yet picked up on, for whatever reason, that they're going to be some kind of beneficiary of the capex build out. Those aren't always easy to find. I don't know. I kind of like, again, on the labor shortage theme, like we're very much, for years, manufacturing capacity and therefore manufacturing labor. And that goes to the sort of, specialty trades and services and even auto repair and things like that. We're pretty secularly short that workforce. It's relatively low status, or at least has been historically. So it's not so easy to get, disgruntled, unemployed college grads to suddenly, learn to weld. So if you're sort of interested in that, there's an ETF, like PAVE, or, that tracks the sort of the EPC industries, which are service industries related to infrastructure, utility build outs and things like that. Again, these are traditionally fairly cyclical. In the case of a service business, not terribly high margin, but if you see that investment cycle, both on the data center, but also on the utility and the energy side, continuing to go for a while, we have hundreds and thousands of fewer workers than we would generally need for that kind of investment cycle. So I think that's kind of interesting. Look, a lot of it is also, go ahead.
On the capex point, I'm curious what you make of. There's a Warren Buffett warning against capex. He has this quote about when he first bought Berkshire Hathaway, the textile factory. Someone came to him saying that there's great news. There's a new loom that's going to make us 50% more efficient. And Warren replies, "Gee, I hope it doesn't work, because if it does, I'm going to have to sell the company." And the reason for this is that everyone gets excited about technological advances and you want to spend money on capex, but then so will your competitors. And ultimately, if you don't think about your ability to capture those efficiencies, then they're just going to flow through to the customer in a deflationary cycle. And now you just spend a ton of money on capex and you can't control any of it. And so the idea is around, can you still have a monopoly once you spend all this money on capex on the thing that you're doing? Or is everybody in this rat race of increasing capex, and ultimately the cost of, our AI subscription is going to go to zero, and they've spent billions of dollars building out data centers?
Yeah. Look, I mean, it's a real concern. I mean, it's breaking into two parts, right? Is like, one is on the capex side is, part of the reason why, even though there's a huge backlog for, say, gas turbines and things like that, transmission equipment, part of the question, well, why don't they ramp up more capacity? And part of the answer, it's sort of twofold. One is, ramping up capacity is extremely expensive and time consuming, and every shortage becomes a glut. And there's some concern there that if you build all that out and you bring all that extra supply online, that when the cycle turns, you're going to be left with all the fixed investment of this huge supply, but demand will have contracted. The flip side of that, of course, means is that there are some structural barriers to entry. Textile manufacturing may not be, but like when it comes to some of this very specialized stuff, whether it's memory, chips, I think if somebody could build a TSMC competitor, or an ASML, they would, but they can't, right? It's not so easy. Gavin Baker had a line, it's like, on the neo clouds, like, if you think that running what's so hard about running a compute cluster? It's, it's just like retail. It's, it's as simple as running 1,000 stores nationwide with quality control and hiring and making sure nobody steals and prices are consistent, and, that the stores are nicely maintained and inventory is fresh, and, it's so easy that only about 10 companies can do it. Right. So like, even though it sort of sounds easy at the margins, there is a lot of execution and a lot of know-how. And it goes back to the manufacturing point as well, it's like, it's not as easy as saying like, we're just going to start reshoring manufacturing from China. Like China is very far ahead, in terms of their, both the human capital and the real capital that's been built up around that industry. So I don't know that it's quite so easy, that this stuff is also fungible. But on the AI point, there's sort of a separate point, which is that how, if switching between LLMs is so easy, and there's a kind of race to the bottom on customer acquisition, where, you can add the open weight model to the problem as well, which is just like, okay, the frontier models, maybe there's 2 or 3 of them. really 3 of them, maybe 4 if you include Grok, and each one of them sort of competes every few months incrementally. They spend, hundreds of billions of dollars to make a model that's a little bit better than their competitor, and then everybody runs over there, and then somebody else comes with a better model, and the open weight models a few weeks later come out, with a distilled version of it that's almost as good. And, are they going to be able to capture the rents sufficiently to make this build out pay out? And it is an interesting question, right? And in some ways it can go the surplus could be to the public at large, right? In some ways it's almost good for the hyperscalers, bad for the businesses using AI, good for the public, right? Because the other version of it too is just like AI becomes so ubiquitous, it becomes table stakes. So rather than seeing a major productivity or margin lift across the board, really what you see is just like everybody's got to buy it, just the same way everybody's got to buy Excel. And if you don't, then you're out of business. But, it's not like we're going to see companies suddenly performing that much better than they were before, so much as, if you don't use it, then you will just fall behind. And so that's, broadly distributed, where the public wins. Yeah, I mean, there's the other scenario is just where the unit economic, it just begins to be more like a utility, and prices do compress down to zero. I think that's less likely. In fact, we're kind of seeing the opposite, where it's just like, no, what's happening now is that compute is still largely subsidized by investment capital, whether it's coming from the companies themselves or from venture capital and things like that. A $200, a month Claude Code subscription can get you, tens of thousands of dollars a month worth of compute. So like clearly there's an asymmetry there. And I think, as compute scarcity begins to manifest itself quite clearly, and, again, every hyperscaler will say the same thing, just that we do not have enough. Nobody's building dark fiber, right? Like they're trying to keep the GPUs from melting, and all the old GPUs and TPUs are all still almost 100% utilized. So the depreciation curve is clearly much better than what people were, originally, worried about. So I think the opposite is happening, where they're beginning to meter compute and give it out to the highest paid customers, and they're beginning to pass through those costs. And I think, so in some ways, the question is if they actually really begin to pass through those costs, would you see, would it begin to put a cap on demand? I mean, I don't know what your experience has been. My personal experience is like, I can feel it when I get throttled, or like when they upgrade a model and then they want you to switch from your $20 a month to your $100 a month, or it's a busy time of day. Like, it's really annoying. Like, there's a real difference between using the more advanced models and the less ones. And I suspect, if you're an enterprise running a high ROI thing, you will pay the marginal dollar up to the point where you think it's worth it for those gains. And that in some ways that seems to me more realistic, which is just like, they begin to pass these costs on to the customer, subsidize a little bit less. That might mean growth will slow down, right? I mean, instead of being able to sort of hyper grow all this stuff by throwing tons of money at it and increasing capacity way more quickly than what current revenues would otherwise dictate, you might begin to see a little bit of a slowdown to allow the sort of the customer spending to catch up. That seems to me almost some ways more likely than these things, because they can't go to zero, right? Like at some point they if they go to zero, then nobody can keep doing it. So that means either somebody's going to keep doing it and they're going to get and then they will be able to, achieve monopoly rents, right? Because they'll be the only game in town, in which case they'll be able to monetize it. But I mean, I think it's sort of an interesting multiplayer game there in terms of who the relative winners are. And I think, like, going back to the first point, I think that's the thing you're seeing more and more is just like there's some. It's not necessarily that, say, that agent, that agentic coding or LLM coding is going to make some great leap forward in engineering productivity that will manifest itself in margins, so much as it just becomes a requirement that every engineering team uses it, and they will pay for it. And as costs go up, they will pay more for it. I think there probably will be some truly AI native products and businesses that will be different than the ones that came before, and that will change things a little bit. But in the meantime, it just seems to be like a software package that everybody's going to have to buy, and those benefits will flow to the model providers and the people providing the compute and the picks and shovels and all those things. And if anything, if the investment cycle begins to turn, it will mean that they will pass more costs off to the customer. And there's already a pretty interesting, it's a little speculative, but if you look at Yipit data or Open Router or things like that, like there is a kind of Jevons paradox elasticity that goes on where, when token prices get cheaper, consumption goes up. It's not like shale or anything like that, where shale, right, obviously, like we there was a great leap forward in productivity, and natural gas became much cheaper. But rather than consume more natural gas, we just consumed about the same amount, but we just paid less for it, which have caused, of course, led to a big, boom bust cycle for a lot of the marginal shale projects. Is just because there was a ceiling on demand. Right now, there's no apparent ceiling on compute, right? The cheaper it gets, the more people want to use it. And, the sort of the hypothetical that I like to play is just like, for this use case, if it worked X% better and was that much more efficient, would it be amazing when it comes to AI? The answer is yes. Then it's just like, it's kind of easy to extrapolate from there. It's like, well, eventually it will, the models will get better and the software around it will get that much better such that we can do these kinds of very simple things. It'll take that much more compute and that much more power. But that just means that, like, we're nowhere near the outer limit of demand for intelligence, to use the word. Yeah.
Well, on that point, curious to talk a little bit more about the VC model. And one thing I'm seeing is that AI is going to bring about sort of the democratization of entrepreneurship, where similar to what happened in social media, where you don't have the traditional media companies owning everything. You now have newsletters like RandomWalk taking market share, and you have like thousands, millions of these kinds of individual creators taking share, some of whom go viral often. And with entrepreneurship and AI, can something similar happen where you have random people that are like, the example I like to give is, if you gave Larry David Claude Code, all the pet peeves he runs into in his life, and he can actually come up with solutions for every single one of them. Yeah, most of them are kind of pointless and funny, but some of them would actually be really useful and go viral, because other people are like, oh yeah, that totally is a problem that I resonate with as well. And then compare that to the VC model, which is still very much like concentrated, making relatively small concentrated bets, versus like, do you feel like the VC model for the future is going to be one that makes a lot more bets across? And it's arguably like, do you even still need entrepreneurs to execute? If you're an idea guy, like, RandomWalk, you're an idea company, you have a lot of ideas. Can Moses now incubate millions of ideas per year, see what sticks, and some of them can go viral?
Yeah. I mean, look, I think they're not mutually exclusive, but again, to break it into 2 points, right, is like, one is, the idea of the AI, solopreneur kind of thing. And, there's been some data around business formation. There was a lot of new business formation at the beginning of the pandemic, probably a lot of it fraud related to like PPP stuff. But like, we've seen a reacceleration recently, and a lot of it is, low propensity firm formation, low propensity to hire firm formation. So like not people in the business of hiring. And in fact, there's other data, like transaction data, that shows that actually a lot of these small businesses are spending historically higher amounts on IT and tech relative to their payroll. So if you wanted to say like, oh yeah, like, the AI driven solopreneur wave is already starting, there's some evidence for it. I think, and again, like, I think it'll certainly be the case, like whether, that some people will succeed in building these small businesses with a lot more operating leverage based on AI than they could have in the past. But I still think you're going to see Pareto distributions, or parallel distributions. There is, it's like, even in the creator economy too, it's like, and, RandomWalk is not in this bucket. It's just like, yeah, we saw an explosion of creator economy, of creators on YouTube or TikTok or whatever it is. But even there, the distributions and success are very skewed, right? Like, there's a few winners who win huge, and there's a lot of wannabe pretenders who either, can't make it or barely making it or things like that. And I think those distributions will continue to hold for the most part. And like, and again, you probably know this from like using LMs also, is like, it's not so easy, right? At least certainly it's not so easy yet. They take work, they take a lot of fine tuning, they take a lot of maintenance. It's, it is fundamentally another piece of software. And even with software before AI, there's a lot of open source and free versions of the names that we all know, Salesforce and, things like that. You can find those things, but, part of the reason why Salesforce, et cetera, continue to thrive is because they do have, legions of engineers and product people that continuously improving it and making it better. And at some level, what you're really looking for is what's the marginal price difference? If there's an AI native company that does this thing that I want to do or close enough, and it costs me $10 a month, am I really going to spend the time to build my own and maintain it for each and every one of these little things that I do? For some people that's probably true, but like, I think that the gap between having an idea and actually executing on an idea is still pretty wide. And if the, if the barriers to entry are lower for everyone, then returns are still going to flow to the people who iterate the most quickly, who do, have the most aggressive cycles, have the best intuitions for these kinds of things, or have other structural advantages. So I don't, it might reorient things a little bit where, if you're a kind of N of one sort of person at generating these ideas, or you're really good at one piece of the stack, but but engineering talent wasn't your whatever it is, like it might create winners around some people who, complementary, I guess, to people who spike on certain dimensions that were missing certain other dimensions in the past. So I think that's certainly possible. But like, I do think you're going to have similar kinds of Pareto distributions on the VC side. Like, I think really you can sort of think of VC as having broken into two. Like there's always been consensus venture, in terms of like, rounds that everybody wants to be in, founders that everybody knows are hot founders because they check all the boxes, or they're building in a space that everybody cares about. And in the past, it's just that there was more room for various players to play in consensus venture. There were party rounds, there were feeder funds and things like that. And what's happened, I think, is that the kind of, just like it's happened in private equity and real estate and things like that, is like the name that, the top funds have just sort of compounded their advantages, and they don't necessarily need the broader ecosystem to fill out their rounds anymore when it comes to consensus venture. And those are the few, still very much, Pareto distributed. There are a few companies that are going to get, that much huger than, whether it's SpaceX, Anthropic, OpenAI, they're going to get that much huger than everybody else and bigger than companies have ever been in the past. And the amount of dollar, it's very capital intensive. So like just the number of players that can play that game, I think has contracted and concentrated towards the top. And again, you see similar phenomenon in private equity, credit, real estate, where the deals are bigger, the biggest players are bigger, they have more of the money, they're controlling more of the deals, and the deals themselves are larger. At the other end of the spectrum, I think there is still, closer to what the cottage industry venture used to look like, truly idiosyncratic, ex-consensus kind of contrarian sort of portfolio of bets where, you're still getting Pareto distributions, but, these, rather than maybe $10 billion outcomes, you're talking about multi-$100 million outcomes and just smaller check sizes and smaller funds. I think that, and that, I think like Slow Ventures has a creator fund, where it's a very different model. It's not an IPO model. They try to find people who are creators, and it's kind of an interesting structure where they invest basically in a holdco that kind of owns all the rights and royalties to everything, whether it's promotional activity, being influencers, and or other rents that they can accumulate over time. It's kind of a hodgepodge of ways where people can build an audience and then monetize that audience in traditional ways. But none of those companies is going to become a Google, right? Like they could maybe become a Mr. Beast at the outer limit, but like what's more likely is they become low capital consumptive, high recurring revenue royalty businesses, which can be great businesses, but it's not, and maybe that's the real venture, and what, the A16Zs and the founders and the founders funds and the Sequoias are doing isn't. I don't really, care on the terminology, but it's a very different business. And I think like investing in big generational technology companies that will have TAMs and outcomes larger than anything we've previously seen, like I think that still will very much be a strategy, and it's a strategy that I think it will be dominated by a smaller number of players. But at the other end of the spectrum, I think there will be opportunities to make smaller, more distributed, bets on companies where, you invest early, get a meaningful ownership share, and then, perhaps they become profitable more quickly and they're less capital consumptive over time, and you still get tremendous returns, and perhaps even power law distributed returns too, but just at a different kind of scale. I don't know if that makes sense or answers the question, but that's kind of, I don't think, venture's not going to go away. It's just changed. It's almost two peaks that have really much separated. Yeah.
Yeah, so you think it's bifurcated between the very large venture firms that just by their scale and amount of capital and access gets them into these very exclusive deals, and then you have the other end of it that might become a little bit more democratized. Do you and you believe that these large the mega venture deals, like those companies themselves have a significant moat to the point that you made around like it might not be worth it for someone to replicate it if it's cheap enough, or but do you feel like that's somewhat deflationary? It reduces their pricing power if there's always like I get the argument that they have a lot of engineers, a lot of people thinking about how to make the product better, but if you take the product on any given day and you can replicate it pretty easily using Claude Code, is there still such a
Well, look, it depends. Obviously that's like a thing that, and they're not stupid. Like, Jason Horowitz, they're not dumb. Like they do think very hard about these questions about how enduring these moats are. I mean, I think you never know, if you could predict the future perfectly, you'd be the greatest investor alive. Nobody knows for sure, but like, yeah, I think they do, in each case, they think that these are, at least have a good chance of being defensible. Whether it turns out that way, who knows exactly, but yeah, I mean, I either they have distributional advantages. A lot of it is also comes down to the team and execution and the founders. Just like, we know, they're Elon Musks of the world. These are N of one people. They're not, there's some mix of whatever attributes that seem harder to replicate, or maybe they have data advantages, or they just become the tool of choice for enough people, and they begin to, and their product cycles are fast enough that they're just adding more features more quickly than anybody else, such that it's not, that a competitor, it's tough sledding for a competitor. Like you
well,
can
let
still
me
be, yeah.
yeah, just to push on that point, the other lens I'm looking at all this through is criminal lens in the limit, where you can now have AI that's used by nefarious people and organizations to do things. And it doesn't even have to necessarily be criminal per se, but thinking about what happened in the apparel industry with fast fashion, where you have these companies that are essentially like knocking off the luxury companies and doing it at an insane speed and at significantly lower prices. Could there be a new kind of software company that just knocks off the latest release from Salesforce or whomever, and that's their whole model, and we'll do it cheaply, and we'll copy the shit out of everything that comes out from these big guys and deliver it to you for a fraction of the price?
Yeah, that's great. And you've done an enterprise sales cycle before, and how, how easy do you think it's going to be to sell, 500 seats or, a $10 million contract to a company because you're a black market knockoff, right? I mean, good luck with that. You might be able to do that on the consumer side, kind of, maybe, but even then, like, I don't know. Like, there are now, right? There are open source versions of things like Salesforce and Workday and things like that. Like, these things exist, but it's not so easy to sell them and to convince, procurement and IT and all those other companies to bless it. It takes months. I mean, once they bless it, they're not necessarily going to be inclined to churn it to something else, and somebody else can be coming out with features, but people think that these things get sticky. I don't think it's so easy. I mean, it could be wrong. I'm sure in some cases, there'll be some exceptions, but I don't think it's quite so easy. I don't think it's quite so easy to replicate, but there's in some cases where the battlegrounds are still very much, open for grabs, where there'll be some companies with some, basically an LLM wrapper, and they'll come out with some bit of, whether it was image generation in the early innings, and all the models were like, we can do image generation. We don't need you. Like, sure. Those are some examples. Those aren't upstarts or knockoffs, taking out the incumbents. It was the opposite. Those were the incumbents taking out the upstarts and the knockoffs, right? Because they said, this is squarely within our domain. We can do this too. We don't need the wrapper layer. I don't know. I don't think that's likely. I mean, look, I don't know. Kirkland and Ellis just announced that they were going to invest $500 billion in building their own in-house AI tool instead of using like a Legora or a Harvey or one of those, But again, that's not a cheap knockoff. That's a $500 billion investment in query whether it will work. Maybe, I think it's more like I'd be more concerned around the interstitial, it's really the SaaS apocalypse thing or not, right? People, all the SaaS companies sold off massively because they expected some AI native competitor come along and eat their lunch. And maybe there's some truth to that, but on the other hand, like who's gonna hit those product cycles quicker? Is it going to be ServiceNow or Workday or Adobe, like delivering AI features on top of an existing distribution that they have and all the data that they have and dedicated customers that they have, or is it going to be some upstart who's going to develop something quickly enough that the other guys can't replicate, that they're going to get it sold, that they're going to get enough market penetration? I don't know. I mean, my bias favors the incumbents there. Market hasn't necessarily agreed with me. There may be other reasons why these companies have sold off, right? Those like the whole real gap versus adjusted gap and SBC is like, okay, maybe it's time to, for a while, these companies were treated like true rule of 40 companies, but the reality is something other than that. So they, multiples compressed to more fairly, they used to be growing 20 to 30% a year. Now they're growing 10 to 15% a year. Those are, if that's the new normal, then they should be re-rated appropriately, whether or not AI is coming to take their lunch or not. That's sort of a separate thing. But no, I don't know. I haven't seen it. Like, I mean, people do vibe code things, but it's they get maybe 90% of the way there, but that last 10% is a huge difference. And when it comes down to reliability, hallucination, maintenance, things not, this, like things break all the time, right? Like things that you thought set up, the little things break. You got to figure out how they break. You got to fix it quickly. It's just a lot that goes into it. And I don't think, AI might get that marginally better in a way that should actually advantage the incumbents with deep expertise. But like, I don't think it's going to be so easy for a 5-person team to just sort of spin up something that competes on so many different fronts. If it's a single point solution, sure, maybe, but for platforms, I think that it's not so easy. I don't know. I could be wrong. What do you think?
Yeah, so I think on the point about coding is hard. Vibe coding makes it sound easy, but it also depends on how the level of like accuracy that you're aiming for. We work with a lot of hedge funds that invest in the public markets, and the level of accuracy needs to be extremely high. And just like in any code, you're going to get bugs. With AI generated code, we have junior people that are working at the company now that are, I don't know, at least like 1 or 2 orders of magnitude more quote unquote productive than they were in the past. They're just banging out analyses left and right. But it is also extremely hard for their managers to review all that code. Like we've had examples where someone like generated 50,000 lines of code to do something taken like a couple of hundred. And just for reference, like 50,000 words is the length of a novel. And so these are lines of codes, like multiple words per line. Like I'm not reading multiple novels to figure out what could have possibly gone wrong here. Yeah, I can make the argument that maybe like AI is going to make that easier at some point to edit, but it is still like when accuracy matters, the getting these things correct or having some human in the loop to try to figure out what's going on is still very important.
Yeah, actually, it's kind of interesting. Where did you have a take on this or even seen it? Is like, I think that people are underappreciating the extent to which, there are going to be enormous returns to people who actually still know how to code because, part of how you learn how to do these things is just by doing them and making mistakes. It's like, it's true of writing. It's true of anything else. Like you have to do the work to get good at it and get a feel for how these things connect and to develop your own style. And I think if everybody, if every young CS student or whatever it is like immediately diving right headlong into agentic coding and spitting out, as you said, 500 lines when one line would have sufficed and, multiply that by 100. I wonder if there's just going to be a huge deterioration in people who actually understand how code works. Nobody's going to actually learn how to do it. I don't know if that's real or not, but I don't know if you've seen that.
Yeah. I mean, I think I've seen the more optimistic argument is that this is what happened with the printing press and democratization of reading and writing. Like literacy enabled anyone to read and write, but you still have a class of professional writers. Could you end up with the same thing where like now in the future, everyone's going to code, but you'll still have a class of professional coders that are the ones winning prizes and doing more interesting things, but it's democratized access to everybody else with all the issues that come with that.
Well, but even with then, right? I mean, like people did with the printing press, people did, calligraphy did become a lost art, right? Like the fine art of writing went away. But in this case,
Speak for yourself, Moses. I was in Romania. Calligraphy was how we learned how to write in first grade. So yeah.
Well, fair enough. So it hasn't gone away completely, but you still had to read and write to be able to produce and discern, whether it was good writing and to interpret it. In this case, if everybody's generating code output based on ideas, but they don't know how the code fits together, they don't know how to make it parsimonious, they won't be able to identify where breaks or where optimization opportunities. And it's just, it becomes, the LMs are trained on past code too. So maybe they're kind of, self-learning and they can become better on their own. But if the corpus of knowledge that humans have created and all those optimization cycles begins to taper and everything becomes code generated from here on out, where do people get where does it get better, right? Or and does there become, a kind of an extreme shortage of engineers who actually know how this stuff works, can troubleshoot it, can optimize, can create complex systems around lots of little code bits that people, vibe coded into existence. And anecdotally, I hear that all the time. It's just like for senior engineers, and it shows up in the data too. There's a wage premium in senior engineers. Like, for them, like code in some ways has made their lives a little bit harder for exactly the reason you describe. Is just like they have a lot more stuff to review. It's a bowl of spaghetti. It's all over the place. And yeah, I mean, I don't know.
Yeah, we're seeing some of our hedge fund like PMs that want to collaborate and want to get involved in this AI stuff. And let's say they want to collaborate on a skills.md file across something that they're doing. And you realize, again, in order to collaborate effectively, you need to use GitHub. And they're now trying to understand how to use GitHub. It's not trivial. Like, these are the philosophies of the how-to of coding is non-trivial. Even if you understand how to write like a for loop or how to like write a skills file, how to share this with other people through something like GitHub requires a decent amount of understanding. And so there's a lot that goes into it, even though like it might seem easy to do it as a one-off, but to build, to orchestrate, chain things together, to collaborate with others on it, to figure out like versioning, to figure out unit testing, all the things that all the process of coding is non-trivial.
Yeah.
I'm curious, like, Moses, on maybe we can wrap up on one last topic that I know you are passionate about, which is real estate. You have a couple of contrarian points that you've made, such as that you don't believe that there is a housing shortage. Say more about that, and say more about how you think about real estate and what you think people have wrong about real estate.
Yeah, no, yeah. So I do have a long running recurring take, which has been largely, borne out by the evidence and the predictions, is that there is no housing shortage, because there isn't. I think some of it starts with even taking a further step back. Like at some level, like I used to be more persuaded by the housing shortage idea because it intuitively makes sense that if you have supply side restrictions like regulation, then you're throttling supply in excess of what demand would otherwise allow. There does seem there's some, and it's probably true in some places like already urbanized places, cities, and things like that. But I think where it begins to go off the rails is like, you begin to dig into it, and it's an extremely unspecified theory. It's like, okay, housing shortage. What does this mean? Like, we don't have, we have homeless people, but they're not homeless for lack of shelter, right? Like, it's not like a shoe shortage or a milk shortage or an oil shortage where you begin to have to find substitutes for something else. Like, people have shelter, right? And so it's really, and the affordability. Well, how much should it cost? Like, what we see fairly persistently, for a long time and all over the world, frankly, is that people will pay about 30% of their disposable income, give or take, for housing. So, like, there's almost a marginal bid that people will make, and they will get the best housing, the best shelter situation they can for the amount of money they can afford. And that's been fairly persistent. So, what you begin to realize is like housing is kind of it's the term that economists love but it makes it seem like there's this fungible good called housing out there, but it's not true, right? People don't want housing, they want a house. And what that is, demand for housing is heterogeneous across space and time. And when you're young, and you want, high density and lots of serendipitous encounters and things open late at night and lots of professional opportunity and opportunities to meet people, then big density makes a lot of sense. And on the opposite end of the spectrum, if you don't, when you're a parent and maybe a little bit more established, you care a little bit more about, you want less serendipity, less randomness. You want a more secure neighborhood.
As you
You don't.
become a grumpy old man, you want your peace and quiet and leave me the fuck alone.
Well, it's that, but also you want the safety of your kids, but also you don't need that kind of serendipity either because you have more established networks and you don't need to be having chance encounters at the bar. And, it's like, look, a lot of the impetus for going to the bar is trying to get laid. And once you get that on lockdown, like you don't kind of need to be drinking whiskey at 3 o'clock in the morning anymore, however fun it might be. Like, and those things do change. And I think, once you begin to think through that and you see actually watch where supply and demand is going and frankly, how responsive supply actually is to demand, as a capital good, like it's actually pretty good. Like, price per square footage actually has been going down since the 70s. You have, units per capita is slightly higher than it ever has been, right? Like, so, and people talk about new permits per capita, but that's the wrong metric to use, of course, because there's a lot of existing inventory. Like, of course, new units per capita is going to go down as you have more existing inventory. And as people move out, you don't necessarily need a new building. You can buy something that's already there. But like, A lot of the evidence is just that, supply, if you come, they will build it, is that, supply does come to meet demand. And we've seen it, publicly traded builders, their margins have compressed to post GFC levels. They're all talking about, demand softness. They've been building smaller, cheaper homes, more concessions and things like that. So, and going back to the demographics point, Trammell Crow, is a big famous developer, used to say, loved real estate because the stork is on our side. As I say, you could be a little bit early, but eventually population will catch up. It's no longer true, right? The stork is not on our side. So you don't have this big secular tailwind on demand to just come fill out space. Home values, right? This was a bet, a consistent bet that I've been taking the last couple of years. I've taken the under on every home value appreciation forecast, and I've been right every time. Home values have not gone up; they've gone down. Even on the most generous, like Case-Shiller, again, where the indices are not even measuring the trades that don't clear, is like, part of the reason, certainly with existing homes, is like they're not selling. And the reason they're not selling is not because of mortgage rate lock-in or anything nonsense like that. More than 40% of people don't have a mortgage. And if anybody's locked in, it's the banks, right? It's not the homeowner. It's that prices are sticky. And if they're not motivated to sell, at the price that they remember their house being worth, then they won't. And it's also a musical chairs problem. So like if they sell their house, for less, for the prices markets are actually capable to bear because of the higher interest rates now, then they're not going to be able to buy something that, that is comparable to their expectations unless somebody else is willing to capitulate. So there's a bit of a coordination problem there too. But, interest rates are the much bigger driver of the cycle. And if you look at countries where that use, variable or five-year mortgages, like repricing has happened much more pronounced, just like it has in the U.S. when it comes to commercial real estate, which includes multifamilies, right? They don't have 30-year fixed rate mortgages. So, they eat the costs of the higher borrowing costs, and assets reprice fairly quickly. And there's no reason that multifamily assets should reprice, but single family homes should not, right? The only structural dynamic reason is just that you have the 30-year mortgage, which insulates homeowners from that change in interest rate costs. But ironically, like if you want to see where the actual decline in home values lives, it lives on banks' balance sheets in the form of unrealized losses, right? It's all that underwater, long dated MBS that they have that's 3%, the stuff that brought, SVB down and brought First Republic down. That's where the losses sit, is just like, look, mortgage rates, interest rates go up, asset prices go down. That's just what happens. But in housing, most of the transactions haven't cleared. And where they have cleared, which is on the builder side, because builders don't treat houses like assets, they treat them like commodities. Prices, in fact, have come down a lot because they price to market and they sell it what the market can bear. And the two big actual drivers of home values are, again, it's net new people and how much money they make. And, the more people you have at the higher incomes, then values will go up. How those values are distributed across headline price and principal and interest is a function of interest rates. When interest rates are higher, more money goes to principal, so the headline price, is more stable. If interest rates are lower, then more money goes to the principal and asset prices go up. But the reality of what people can pay, that monthly payment stays about 30% of income wherever you go. So once you sort of begin to see that, and you see actually you have fairly elastic supply. Supply is showing that we have more supply right now. We have a moderate housing glut than relative to a shortage, and that's been, even structured over a longer period of time. Supply has been fairly elastic, and all the pricing, all the supply demand dynamics are showing actually that we have a very well supplied housing market. And even getting into the particulars, it's like, look, density is often or lack of density is often a feature, not a bug. In the suburbs, it's not supposed to be dense, and you get this weird dynamic, which people, almost engage in offhandedly, is like, yeah, sure, everybody wants single family homes in the suburbs, and they're really out of reach for a lot of people. So the solution here is to bulldoze them and build multifamily towers. And it's like, you kidding me? Like you just said, like what people want is single family homes, and your solution to this problem is to turn them all into multifamily towers. Like what the hell is wrong with you? But people kind of very casually will just make this assumption like, oh, single family homes are expensive, so what we need to do is upzone single family zoning to make it multifamily. And it's like, that's batshit crazy, but people do it. And again, why is it? And even if you want to make the case and that we should bulldoze Park Slope and turn them into towers, or bulldoze the West Village and turn them into towers, I think the argument is a little bit more compelling there. But once again, keep in mind, part of the reason why those neighborhoods are so attractive is precisely because they're not that dense. And there are 8 billion people in the world, and the number of people who would love to live in the West Village or Park Slope is far more than the number of units you could provide to, maintain that kind of a neighborhood, right? It's just, there's a basic asymmetry there. It's just like, it doesn't, not everybody can do it. Everybody, if there is an outer limit, it's got to be somewhere where that is, people can decide. But like the idea that there's no outer limit, I think is just wrong. And the idea that demand is not, as I said, there's a really easy, the cheapest way to make, housing, the most surefire way to make housing prices go down is crime and litter. Right. So if you wanted to solve the affordability crisis, just, more crime and litter everywhere. And people look at you like, well, that'd be crazy. And it's like, why is that crazy? Like you just said, like, I thought, affordability is the thing that we care about. Clearly what matters, what people will not say is like, actually, no, the quality of the output is there are qualitative differences between housing. Right. And it's not all the same. Nobody says there's a Range Rover shortage because there's an affordability problem with Range Rovers or whatever. I don't know. I'm not a car guy, but like people understand that, that there are premium goods and there are premium locations, and people will pay more to live in the very best place because they perceive that, rightly or wrongly, to be very important for their careers and their social lives or their status. Like housing is a status good. It's a positional status good. The neighborhood and the zip code you live in, people will pay more for a small house in a fancy zip code than they will for a larger house in a less fancy zip code. And, people are buying their neighbors just as much as they're buying the roof overhead. All of these things are persistent and true, and they don't. And I think the housing shortage, discourse, so to speak, doesn't account for them at all. And to the extent that it does, it kind of thumbs their nose at them, even though revealed preferences, say that these are some of the most important things. And it's just kind of foolish. So yeah, I don't, to summarize, I think the theory there is a housing shortage is itself like, it's hard to refute because it's so underspecified, but also it's just like, it reflects what I call like the hydrothermal vent theory of home values, which is like, for some reason, somewhere on the map starts spouting nutrients, and the goal is to jam as many barnacles on the nutrients as you possibly can until somehow, the source of nutrients is depleted. And then you go find some other barnacle spouting value and jam as many barnacles there. And it's like, that's not how home values actually work, right? They work on a number of different dimensions, and it depends on who wants them and at what point in lives there are and all of those kinds of things. And I think once you begin to think about it that way, it's like actually the home value, the home supply and demand of home in real estate is actually pretty good. And if anything, the evidence suggests that we're a little bit oversupplied right now. So yeah, I mean, it gets people very angry because they believe very strongly in it. And it's one of those rare issues, I think, where you, like anything else, where you get widespread consensus, it usually involves some shared overlap of agreement between otherwise disparate constituencies. So like, you get policy wonks who generally like to centralize, and, they don't like the idea that little, local housing boards have control over zoning when they'd rather it run at either the state or the federal level. Probably ideally for them, more central the better. You have like the, business community, whether it's real estate, National Association of Realtors, they're the ones 10,000 houses short, of course, because they want to sell houses, right? So and builders love multifamily because it's it's the highest ROI per square foot. It's, it's very dense. You pick most units into any given place. They're the cheapest to build, relatively speaking, because, you're not spread out over lots. So like, the builder community loves it. The wonk community loves it. The national realtors love it. And then, even on the sort of, liberal or, left progressive conservative or libertarian split is like, the economics profession, their bias prefers it too, because they're generally biased against, I think rightly against regulation more generally. It was just to say for them, it's like, this is simple, right? Why would you regulate? Regulating supply makes prices go up. It's not just true in housing, it's true elsewhere. So you get a lot of different groups that otherwise don't agree on things, agreeing on this one thing that we need less housing regulation. I think that's partly how it becomes so persistent. But it's also like why I like to call a lot of the policy people, fair weather YIMBYs. Is like, this is their only YIMBY issue. And it's not only zoning. That's not entirely fair, but they seem to focus on that. And it's like, okay, if you want to, lower barriers to entry on housing, then there's other things we could start with. We could use like the fair housing laws, or we could say workplace safety laws and environmental laws. There's a lot of other things you could pick on. And again, some of them do, is to their credit, besides zoning, but it seems to be there's a very strong fixation on single family zoning and desire to upzone. And that's where I get suspicious. And in other domains, whether it's, financial markets or healthcare, especially, right? That's another theme that I write about is, we do need healthcare YIMBYism. Like, just deregulate the whole thing. That's the lowest hanging fruit, silver bullet thing I think that's out there, is just because we have so artificially constrained supply of healthcare at every level, whether it's doctors, nurses, providers, facilities, the stuff that they use, the screws that they use, the tools that they use, how they use them, all that, and then on this, then we subsidize demand on the other side, and we get surprised when the cost curve explodes. It's like, okay, if you don't, like, that's a much better case for YIMBYism than real estate. And so when people get very passionate about deregulating, and all of a sudden they discover their Hayek, and this is the one dimension where they care about Hayek, I'm like, I think there's other reasons to be skeptical. And yeah, you see now with the data centers too. It's like all these, and I made this prediction a while ago. It's like, I can't wait till the IMBs, till the IMBs start getting outbid for housing by the data centers, and all of a sudden, the IMBism is going to go out the window, and they're going to start wanting to regulate data centers. And like, it's exactly what's happened. It's IMBism is only good insofar as it's satisfies their specific policy goals, which is probably providing cheaper apartments to their constituencies who are probably lower income and things like that. But insofar as it doesn't align with those goals, then they're not interested. So it's really not a question of, it's not deregulating, it's re-regulating, it's shifting regulatory power from one group to another. And that's not maybe that's a good outcome if you agree with those goals, but like, that's not a YIMBY, it's not an actual YIMBY case. It's it's a Trojan horse for YIMBY, for something else.
Moses, I love it. It's always a pleasure talking with you. I feel like we've covered a very wide range of topics, from there is no housing shortage to robots wiping your butt versus shooting you, to what the future of VC is going to look like. And I definitely recommend RandomWalk for anyone listening. You can get a lot more of these very punchy, thoughtful takeaways from Moses.
And
But yeah,
Japanese bidets for everybody. I think that's the real civilization savers.
that will be the world. Yeah.
Yeah,
Don't mind it. I have one. I can definitely relate.
solves the butt wiping problem.
Exactly.
Yeah. All right, Matei, thank you very much. I appreciate it. It's always good to talk. Let's do it
Yeah.
again.
Thanks for coming on, Moses.
Okay.